find your way back home.
What's up, guys? Welcome back to the EatSleepProfit YouTube channel. I am Jay. Now, you guys haven't seen me for like 3 months. A lot has happened. Every single time I take more than 1 month of like a hiatus from social media, a lot of people think I died. People think I blew my accounts up. No, I'm still here. I'm still alive here. I'm still trading. Come this summer is going to be 3 years full time. So this is kind of a testament just to show you, if you really stick to a plan, especially dedicate a lot of time and hours, and especially developing systems, developing routines, stick to those plans. Don't get too greedy. It can really work out, not just in a short-term time frame, but a long-term time frame, which i.e. is 3 years full time for me. It's not a boast type thing. I'm just trying to show you it's realistic as an approach. Now, coming into today, especially what I want to go over is not just scanning in a very, very simple sense. I want to show you some advanced things that I do on the scanners just to show me different stocks in different areas, different stocks as they're moving to different areas like that. And a lot of times I have different scanning strategies for different type of strategies that I trade with. So it's a lot of times you just see this normal setup here, but I'm going to go more in depth into especially how I set it up for different time frames and different styles of trading. Now, especially since you guys haven't seen me, I've still been teaching. I've still been in the trade room. I've still been going over a lot of trading stuff. So especially, I think we have one of the best trading rooms in the world. I mean, at the end of the day, there's a lot of quality people in here that dedicate time to actually look to help each other out. So at the end of the day, if you guys are in the trade room, you guys are watching this video, big pat on the back to you guys. You guys really, you guys are the light of the world here. But back to especially today's video. First off, whenever you see scanning and my scanning style, just a brief overview of it, because I have videos purely on scanning. I don't want to get too in depth with it. But first off, whenever I scan, I use Thinkorswim. That's my main brokerage. I use the scan tab, go to the stock hacker here. And then I have these two different filters I look to scan for. So the first filter is going to be last, and the second filter is going to be volume. So when we talk about the last price the stock was traded at, that's the last is going to be an indication for price. So there's a lot of different price indicators out there. So you can look at the bid price or the ask price. The bid price is going to be the current buyer's price. The ask price is going to be the current seller's price. So if we look at the last price, a lot of times the last price is going to be the last price the stock was ticked at on the day, which is usually going to be synonymous with the market price. I like the last because it's usually the in-between. Usually during the active trading day, you may see a bid price of $3.95 and an ask price of, let's say, $4 per share. And usually the last is right in between, let's say like $3.97. So kind of it's always that in-between point. So I really know where the average of the price is going to be once I look at the stock at that point. Now, when it comes to trading my niche, I look for stocks between 50 cents and $10 per share. Mainly the 1 to 5s are going to be like kind of my heavy niche that I go after. You see most of the trades that are at the top of the scanner here are usually between 1 and 5. That's just pretty much how it goes, where a lot of that volume kind of congregates. But the 50 cent per share minimum is so I don't jump a lot into the OTC plays. The OTCs used to be popular back then, but now they kind of died off. A lot of manipulation, a lot of pumping up and schemes happen on those markets. Coming into the maximum of around $10 per share, purely that maximum is just going to be there for, depends on kind of the amount of money you have to trade. I say you at least want to have at least $500 to $1,000 as a minimum. I mean, 500 to 1,000 shares minimum, especially position sizing at the low end. So for example, on a $10 per share stock, you're looking to buy 500 shares, that's $5 grand you need to have. So overall, as you start to grow your account, you want to exceed that maximum a little bit higher and a little bit higher. You're going to find the higher price stocks are going to hold price action much better than the lower price stocks. So that's just kind of how it goes at the end of the day. Second filter, volume. What is volume? Volume is going to be the amount of shares that have been bought and sold during the day. So by the time the market opens, from the pre-market all the way to the time the market closes, at the end of the after hours, that's where all the volume is going to be tallied up for the whole day. So if a stock has 9 million volume, means 9 million shares have been either bought and sold during the day. It could be 4 million bought, 5 million sold, 5 million bought, 4 million sold, whatever. I mean, it's just the congregate of all the volume together. Now, the volume, especially higher volume trades, are going to look much better on an intraday chart than a lower volume stock. So you really always have to make that distinguished aspect. Now, looking at this, when I create my watch list, they're very, very simple. Pretty much I scan scan for the stocks, I look for all the stocks that are over 1 million volume and over usually over 15% in gains. So I kind of just go up the list here, keep on going, keep on going, keep on going. Now, when it comes to all the stocks above 15% in gains, you can see that I want to X out stocks that I don't have over 1 million volume. I find 1 million volume as a good cutoff point where you find stocks that are actually tradable chart-wise and have enough momentum behind them. So I'll start to X out some of these plays here. And you can see I'm kind of left with somewhere around 5 or 6 plays. Now, at the end of the day, if you're looking to watch 5 or 6 plays all at the same time, some days you may have 10 different stocks that fit on your scanners here. I actively can't watch 10 different stocks at once. Either I'm watching 4 or the other 6 are going to be things that I'm not really paying attention to, and they're going to be detracting my attention from the real stocks. So I usually just take the top 4. Top 4 that I can see during the day are usually going to be the plays that I'm going after. Statistically, they're going to be the highest chance stocks to start to grow. So once I chart these stocks out, I just right click, go to more info, TOS charts, click this 4-box scenario. Boom, is going to click on 4-box here. Move to the 1-minute charts, and pretty much this is how you're going to develop a watch list. Now, when it comes to, well, see, so hopefully you guys grasped all of the information. Hopefully I'm not going too fast. If I am, you can throw comments down below. You can always email me if any questions pop up. Now, getting a little bit more in depth into things, this style of scanning that I just did is more tailored towards intraday trading. So trading right when the market opens, and especially taking positions on that side, or for example, playing those morning spikes in the morning setups here. That's where you're really going to do majority of this style of trading. Now, getting more advanced with the scanners here, you can add study filters. So I find study filters are commonly overlooked on the scanners, but they really speak volumes because you can look for very, very specific things and specific actions on stocks. I have 2 different study filter setups that I commonly use, and I want to go over those. I have other ones that are very, very in depth, which I show most of my students and things like that. But just these 2 ones are pretty much where 90% of the scanning that I do is what I'm going to show you here. So first off, the first setup that I utilize is going to be a study filter, going to price performance, and then going to near highs and lows. So I'm usually looking for stocks near highs and lows, or near their current high, or near their lowest price. And then you have the 252 period high on the day. Either you can look at the high or the low, or you can look at the high and the low. I usually look for the highs because I'm more of a long bias trader. Now, looking at this string of words, the 252 period high on the day, that is very, very important because there's 252 trading days in a year, and a 252 period high just means I'm looking for the yearly high on the stock. So if you look at this string, the current price is within 3% of the yearly high. That's all you're really looking for. So any stock that's going to pop up on the scanner now that I scan for, all these stocks are going to be within 3% of the yearly high. Either they're going to be at their yearly highs or within 3% of that price point. This is very, very good to look for stocks because certain swings that you want to go after are stocks you want to hold for multiple days. They're usually going to be breaking their yearly highs. When stocks break their yearly highs, that's a very, very good fundamental sign, as well as some companies come out with PR, they come out with news reports saying, hey, we're breaking our yearly highs. We're doing the best ever. Yeah, I mean, there's a lot of just fluff and a lot of things, but it usually can snowball into multiple days of running. So for that, let's say if I take the top 4 stocks here, if I look at the top 4 stocks that are there, if I look at their daily charts, each one of these stocks are going to be trending at, if not above, their yearly high. So you can see that all these stocks are pretty much running to a very, very high point. You can see stock like FMCKO, this is an OTC play, kind of out of my realm of comfort, but you can see that really running fairly quickly like that. You can see a lot of stocks running in that nature. So if you're looking for potential swings, this is going to be a very, very good scanning setup to utilize. Now, also in correlation to this scanner too, you don't always want to just look at the top 4 plays. Just remember, all the stocks that are going to be on the scanner are going to fall within that 3% variance. So let's say, for example, if I'm looking at a stock that's only up 2% on the day, a lot of these stocks are going to be in a good range where they're not already running so far. Sometimes you may want to pick some of that low-hanging fruit. So if I look at this, looking at a stock like FMCKJ, it's an OTC play as well, but you can see it's constantly trending its yearly highs. Other stocks like GMRE, you can see is looking to break above that previous yearly high, which may potentially become a good swing later on. You still want to research the news, look for analyst recommendations. I don't take those wholeheartedly, but at the end of the day, if there's a good positive analyst upgrade or a good high price target, that's going to add to the overall trade here. As well, looking at if FNMAS, that's another good stock that is running up. So if you potentially want to jump into swings, and I'm not going into the swing trading strategy right now, I'm going to do a full set video on that. But if you want to find potential swings to go after, this is a nice, good area to look for. Now, the second side of things, whenever it comes to, let's say, for example, with me, you know, I like to trade stocks that are very, very active in the morning. Now, to find some of those stocks, and especially with me, stocks that gap up overnight usually become a very, very good stock to watch. Not automatically a good stock to long or a good stock to short, but a good stock to watch altogether. I'll use a different study filter. So for example here, I'll exit this back out. It brings me right back to where my traditional scanning parameters are. I don't change anything up here. Then I add a study filter, go to price performance, and then I go to gap up. So when I go to gap up, I'm looking for stocks that are currently gapping up from their previous day. As long as you keep this day indicator here, it's going to just look for the candlesticks on the day. Now I want the current bars close, for example, in price. The current bars close is just going to be where the current price technically is. Gaps more than 2%. Or more above the previous, usually going to be the previous day's close. So for example, the current price now is going to be 2% above the previous close. Now, 2% of a gap up isn't something that's going to be that kind of sticks out at me. I would probably look for something at least 10% or above as a gap up percentage. So when I scan for this, all these stocks here you're going to look at are going to be gapping up from the previous day. So if I look at all these stocks, technically, they're all going to be gapping up. So if I look at the scan, look at my charts, look at all these stocks here, they're all going to be pretty much gapping up. You can see this stock gapping up here, this stock gapping up, this stock gapping up. Big gap ups like that are attractive a lot of attention. Usually the gap ups are going to be influenced by a news report that comes out. So you can see these four stocks here. All these stocks are pretty much gapping a little bit higher than they previously were, which are very, very good signs to especially look at. Now, when it comes to especially looking at these stocks here, there is a good guarantee maybe 80 to 90% of these stocks here that have gapped up big like this have a news report behind them. So look at the news. If I look at the newest news report for the stock, OnSec reports was granted global rights patent portfolio for the combination of use. Whatever is going on, I can look at the price action of the stock. The stock spikes up very, very quickly. It probably has to be based on something. There's a lot of news reports currently going for this stock here, which is usually can be a telltale sign. That's why the stock is gapping up. Let's say JMU, for example. Look at the earliest news report. JMU Limited acquired Unicorn Investment Limited. So it's a merger pretty much. So a merger like this, pretty much, this is what's going to cause a huge spike in the price. And I can look at the intraday movement, which is very, very high. So if you're looking for potential stocks that have big news reports that are causing a big fluctuation overnight in price, or especially in the gap up, this is a good filter to use. And as well as if you look purely for gap up stocks, if you look to trade them towards the end of the day, they have the potential to gap up again. A lot of stocks that have the ability to gap up will do those sometimes the next day or consecutive days afterwards. Now, if you're a short bias trader, you can always utilize a very, very high gap up price here. So usually stocks that gap up very, very high tend to be very, very short biased because all the gains have happened in the pre-market or the after hours. And usually during the intraday, everybody's getting the scraps. And usually after they don't want to continue to run, they'll start to fall in price. So a lot of times you can see some of those stocks that, for example, gap up very, very high, like JMU, for example, right out of the gate, that has a lot of selling pressure here. So you can see the large gap up starts to pull back down. Going to the intraday, most of its gains has happened in the pre-market. Then once the intraday actually opens, there's not a lot of room left for this stock to continue to go upwards. A lot of people start to sell because just imagine, like, there's people that have been buying and selling the previous day. If I would have bought this stock at $1.26 and I wake up the next day and it's at $2 per share and I made 65% overnight, what should I do? Hold the stock or should I sell it out of the gate? Personally, even me, I would have sold it out of the gate, which causes these huge downtrends and a lot of selling pressure to come through this stock here. And especially if it breaks below its opening price, is going to be a red candle on the day, causes a lot of negative sentiment. Nobody's looking to buy into a stock that's red on the day. At the end of the day, usually they fall off the face of the earth, and those become very, very good short selling opportunities. You don't want to get caught up into a squeeze, for example. So once you've made your gains, try to especially cut those. If it ever consolidates sideways, don't look to hold through sideways price action. Look to take the meat of the move. So if you're up 10%, 15% on a short sell and the stock starts to trade sideways, might as well exit while you have it, because that sideways price action can develop some support and then from there spike back up. So I'm not getting too technical into the strategies here, but I'm just showing you can really look to scan in different sections rather than just scanning the traditional setups like this. So this is the very, very common setup that I utilize all the time, using the last and the volume, using the price ranges, but you can add those study filters to help you out. So hope you guys learned something. This is a kind of a little bit of an easier video rather than very, very technicals. Just know this summer I'm gonna hit the videos very, very hard. Everybody's been DMing me, net messaging me, emailing me when the new videos are gonna come out. I'm coming with the fire. Just wait up. If you guys need any help, any further help, any one-on-one mentoring personally with me, you can always email me. You can always go to the website. You can always look at the programs I have to offer. Hope you guys enjoyed something. Hope you guys learned something today. This is Jay from EatSleepProfit. Big peace.